around dividend of 8,000 to 9,000 crore every year. The valuations are slightly higher than the other commodity companies. The gap is widened. So just to give you an example, Vedanta is trading at 4.4 times EV EBITDA on FY22 consensus estimates. Tata Steel is at 3 times. So, the arbitrage which was there on valuation is actually gone. The second thing for shareholders is that there is going to be a dividend. So dividend yield is going to remain high. And if commodity cycle was to turn, it's a hugely risky bet.
All right, we have a market expert, Mehraboon Irani, who joins us on the show. Hi, Mehraboon. What's your take on the metal stocks? They've seen a bit of a correction, and it seems today they're seeing a bit of a bounce, post that correction. Though we have the PBOC's comments that have definitely played on sentiment in the Asian markets as well as in our own markets. Your view on the stocks from here, particularly Vedanta, valuation-wise attractive, but you never know what the promoter entity is going to do next. Go ahead, Mehraboon.
Nigel, in general, as far as ferrous metals goes, I think I would go by what companies announced their numbers. And I think definitely there was a slight disappointment as far as margins go. I'm talking of the ferrous metals right now. So it was for JSPL was the worst, then it was for Steel Authority of India, and third it was for Tata Steel. But the volumes were good. And this was largely because of export sales. So the domestic demand was slightly muted, mainly because of the monsoon. Now, if we go to the non-ferrous metals, I think if we take aluminum and zinc, I think higher prices definitely helped the major players over there like Hindustan Zinc, and maybe I would use the word Hindalco. Now, as far as Vedanta goes, allow me to state that despite the price looking attractive, I think I would definitely not stick my neck out, because I think most of us stuck our neck out quite a few times as far as Vedanta goes, and have been proved horribly wrong because of certain ad hoc decisions or announcements coming from the management side. I'm not questioning them. They are the authority. They have the right to do that. But very difficult to predict. And therefore, despite possibly everything going in favor of Vedanta in terms of valuation, honestly, I would not stick my neck out and make a recommendation on that.
Mehraboon, hi, afternoon. Just a quick word on the telecom names. These stocks have rallied how many times based on the buzz that tariffs are going to go up? Right now, tariff hikes actually happen, and look at stock reactions. Vodafone actually went the other way. Bharti, the reaction has been very tepid. I mean, 2.5% yesterday, barely anything today. Is everything priced in, or the other thing could be that the market is waiting for what Jio will do, because that will decide whether this is an industry-wide phenomenon and these companies are able to keep subscribers along with the higher tariffs. What's your sense?
I think, Prashant, Vodafone has followed suit as far as what Airtel did yesterday, and all eyes are on Jio as to what they're going to do. But certainly, this tariff hike, which Bharti announced yesterday, has come after a long gap, maybe around nearly 1.5 to 2 years. And I think it was something which all of us were expecting it, and at last it's happened. Is it positive? Certainly, the answer is yes. Does it give a fresh lease of life to Vodafone? I personally believe that whatever has happened as far as Vodafone goes till now really means that the company is here to survive. Does it become a profitable venture? Very far off. But coming to Airtel, I think everything is in favor of it. I think even the subscriber addition, the numbers which were announced yesterday were positive. Surprisingly, Jio lost some subscribers here and there. But I think as far as Reliance goes, we really need to see as to what Jio does. But as far as Reliance goes, I would never consider it to be it's a real conglomerate and not merely a telecom story. As far as the telecom story in India goes, I continue to remain very positive. The question is, that do you buy Bharti Airtel as a trading bet? The answer is certainly no. But if one has it in the portfolio and one wants a proxy for the telecom sector, I think certainly one can continue to hold on to it. Will the stock be higher than where it is right now over the next 1 year? Answer is yes. They have taken care of the liquidity problem with the recent rights issue. The tariff hike also is definitely a welcome move and should definitely help the company in as far as the incremental revenue to EBITDA goes. So I think all said and done, it's a big positive for Airtel, and we now need to see what Jio does.
Got it. All right. Stay with us, Mehraboon. Let's get to the other stock, SRF. That stock has been steadily moving higher in today's trading session. This after the management at the Jefferies analyst meet said that demand outlook for the second half of the year looks rather strong. Sonal joins us to run us through those details. Sonal?
Yes, for SRF in their analyst meet, the key takeaways were quite positive. On this specialty chemicals business, the company said that they are seeing strong demand, and that is something that will aid overall numbers in second half of FY22. They also said, and it was an important key takeaway, they said that the margin pressure that they saw in second quarter is abating now as feedstock prices are coming down, and they are not seeing any new verticals targeted in near term because demand from agrochemicals and pharma is quite strong. In their refrigerant gas business, they are seeing some market share shift from China, particularly in the US market. On their packaging business, however, they say that BOPET films are in oversupply with margins under pressure currently. However, the BOPP film lines, they are firm, but a new number of capacities are slated to come in calendar year 2022, and that is something that could put margins under pressure. However, they say that they are optimizing unit costs to limit the impact on margins in this particular segment. But let's talk about technical textiles, where the outlook is positive. They did see margin pressure in quarter 2, but now they are saying that volumes have improved in quarter 3, and that is something that will improve their margins as well in second half of FY22. They intend to undertake a capex of around 1800 crores in FY22 and around 5000 crores over the next 2 years. Despite all these positive commentaries, Jefferies has maintained an underperform on the stock with a target price of 1890 rupees per share. Back to you.
Okay, all right. Thanks a lot for that, Sonal. Mehraboon, what do you make of this? So they're sounding positive for the second half of this year on their two big verticals in particular. That's the chemicals vertical as well as the technical, textiles. Now, they're talking about margin improvement, demand strong, volumes improving as well. But the stock trades at close to around 30 times, even if I assume that next year the EPS growth is rather significant. At around 2,100, your view on the stock?
Well, I've been very positive on the entire specialty chemicals segment. Most of the stocks have done very, very well. But if you had asked me this question, Nigel, about a month and a half, 2 months ago, I had become a little bit uncomfortable with the valuations of most of them. The margins had to be under pressure. Quite a few conference calls which I attended of some of the players. I think clearly the management were honest enough. Some of them were honest enough to admit that margins are under pressure. Now, if you go to specialty chemicals, you need to study each company separately. And I think if you ask me with clear disclosure, I'm personally holding SRF, I know for sure that quite a few of the company's plants are undergoing expansion. They're doing very well, except for the packaging films business where the margins are really under pressure. But there is a clear growth as far as the demand of BOPP films goes. As far as the technical textiles business goes, also the company is doing very well. So I think overall chemicals also is doing well. And with the expansion the company is doing and the whole front of the management is putting in the way they are expressing themselves, stating that the second half should even be better. There are reasons to believe that the downside from the present level should be limited. Is the stock expensive? Maybe in terms of valuation, relative value.